All right.
It's a regularly scheduled meeting of the Finance Committee at 6:37 on August 5th. I'm the committee chair, Council Trumbull, of the councils on the committee, Council Leonard, Council Yakavaka, Council Dean, Council Fournier, and we also have Council Fish and Council Hawes. And the first item is bids.
Thank you. Our first item is to waive the bid process for repairs at Sawyer Arena. This is through Parks and Rec. Part of the feasibility studies that we had done for the Parks and Rec Center and at Sawyer Arena identified various projects that needed to be done, particularly with repairing the ice mat and some vertical insulation around the dasher boards to prevent them from leaning, which is a problem that we've had for a number of years. During that feasibility study, the group worked specifically with a company called Preferred Contractors Incorporated to determine what needed to be done. They had an estimated cost of $65,000 to complete the project. So, and we would like to have that done before we open up for this season. So going along with that, the company is familiar with Sawyer Arena, what needs to get done, specifically working with our feasibility study group. So our recommendation is to contract with Preferred Contractors for $65,000 to repair the current ice mat and install that vertical insulation before we open for this fall. So we are looking for approval to move forward with that contract.
Any questions on this item? Or is there a motion on this?
I make a motion.
Second.
Second, without any objection, this item has approval.
Thank you. Our next item is also waiving the bid process. This has come up before. We run 5 ambulances through our fire department. And during our replacement cycle has been to refurbish, essentially remount the thing. We remount the body on a new chassis as opposed to buying brand new ambulances. A brand new ambulance costs around $400,000. We can do this remounting at around 211. So it's a little bit more than half the cost of a new ambulance. This is the third one out of our 5. The other 2 we're very happy with. It seems to be a really good process that we're going through. All of them have been done by PL Custom in New Jersey. We want to stick with that company. So we're looking for a permission to move forward with doing a third ambulance remount at $211,127.
Questions or a motion?
I make a motion. Second.
No objection, this has approval.
Thank you. Our next item is a patrol vehicle for the police department. This is being purchased under the state's master bid agreement, so we did not put it out to bid. We bought through the state contract. But it is a 2003 Ford Explorer for $48,795 from Darlings Ford. It is well within the budget that in the 25 capital budget was $189,000 to replace a number of vehicles. This will be one of the ones that's being replaced. Once we have the vehicle in stock, the vehicle that is replacing will be sold at our annual auction.
All right, and Council Fournier.
How many were gonna be replaced this year? I know.
I believe it's
It's
5.
before, right? No,
I was
5?
4 or 5.
Four,
I was thinking 5, but it could be 4.
Well, if you look at the price, it's budgeted.
Yeah, I just wanted
It's
to make
various
sure.
vehicles that we
Yeah,
purchase.
okay,
Some could be
yes.
higher, some could be lower.
Yeah, usually I thought they were in the mid to high 30s.
Yeah, that's what I was thinking. I mean, but it's fine. I'll make that motion.
Okay, is there a second?
Second.
And without any objection, this has approval.
Thank you. Our next item is to award a contract to Hughes Brothers, and this is for the Hammond and Central Sidewalk improvements. We did go out to bid. We received 3 bids that range from $130,921 to $533,634. Hughes Brothers was the low bidder at $130,000. It is a project that we've been looking to do. It is installing new concrete sidewalks, resetting the granite curb, providing ADA curb ramps with detectable warning fields and landscape improvements. It's one of our budgeted projects, and it's well within budget at $139,921. So we'd like to move forward with Hughes Brothers.
Make a motion.
Second.
Moved and seconded without any objection, this item has approval.
All right, and our next item is the Cold West Barn. We did go out to bid for the design services. Because of the FTA funding for this project, there's very specific rules that we have to go by. One of those is that we have to select the design award had to go to who had the best qualifications, not the best price. So we under that process, we can't even look at the prices that people bid. We put out a request for proposal. The proposals are looked at, and once we select the bidder that we believe has the best qualifications for our needs, they are selected, and then we open up their pricing. And at that point, we would attempt to negotiate with them to, if the price is more than what we had planned on budgeting or budgeted for. So during that process, it was Artifacts Architects and Engineers that was selected as being the best proposal for what we believe the Cold Bus Barn should be. After opening their bid, the fee would be $612,419. It is actually less than what we estimated the design fee would be, so that was pretty good. And because this project is going to be probably a multi-year project, totaling probably close to, if not over $10 million by the time we're done. Again, this is just the design phase. So we would like to move forward with a contract with Artifacts for $612,419. If approved, it would be on next week's full council for final approval.
I make a motion. Second.
Moved and seconded, and this has approval without any doubt. Thank you.
Thank you. Our next item was a request for interest and cost be waived for the property at 16A Street in Birch Hill Estates. Miss Woodman purchased the home in 2021. And unfortunately, as is the case, we see quite a bit with the sale of mobile homes, is mobile homes are taxed as real estate under the law, but they're treated as personal property when you buy and sell them. So there isn't a deed like a normal real estate transaction that gets filed at the registry. All deeds are received by the assessing department, so we know when ownership changes. Even if the owners don't tell us, we see the deeds. Because there are no deeds filed on mobile homes, it is up to the owners or the seller to come in and say either sold it or I bought a new mobile home. In this case, that did not get done for several years. Miss Woodman has limited income, and so she has been unable to pay the taxes. The Treasury Department received a visit from Reverend Carl Schreiber from East Orrington Congregational Church. They were looking to help out Miss Woodman. They did leave a check to pay the full principal balance of all of the taxes, but they're requesting that we waive the interest and the cost of $380.16. That is from the past due interest as well as lien fees that have been incurred. Staff is recommending that we go ahead and approve that write-off. Had Miss Woodman known to notify the city upon the sale, she would have qualified for the homestead exemption, and that would have fully exempted the property, and none of those taxes that didn't get paid would have not have been assessed in the first place, and none of the fees or interest would be due. Legally, because we weren't told, they are technically collectible, but we think it's fair that they are willing to pay all of the principal balances on those years. With the city waiving $380.16. We thought that was a fair trade in an unfortunate circumstance for someone that is struggling and has a hard time paying their bills. So we're recommending approval of writing off $380.16 to the overlay account.
I make a motion to approve.
Moved and
Second.
seconded. I mean, it seems very reasonable. If they say it was a larger amount, we don't have the ability to lien these types of properties if it's personal property.
No, we can, because their tax is real estate under the law, but they're treated as personal property. So we would
Oh,
lien
we
them.
could lien it.
We could lien it,
if we
the
did-
lien
if
would
we-
mature, and we
Yeah.
could become the owner of the
Okay,
property.
right, okay. So moved and seconded without any objection, this has approval.
For some reason, I thought this would be executive session.
This type of tax write-off is not, because it's not related to a hardship
Okay.
request. Even though she is struggling, it wasn't a specific hardship
Yeah.
request. It was a third party asking if we could do
Mhm.
something for her, and we thought it was fair that we do.
Sure.
Our next item is related to the school department. Throughout the budget process, at various meetings, the council's been updated on multiple projects that the school department is doing on a number of schools, repairing walls, repairing roofs, updating air quality. And what we're requesting, or what the school department is requesting tonight, is what we believe is the final funding for the projects that don't have funding coming from other sources. They've received COVID money, which has been applied. They received the school revolving renovation fund. That's limited to $1 million per project. That has been received. But there's still unfunded amounts. That is the air quality system at the William S. Cohen School, roughly 3.3 million. Air quality at the James Doughty School, 4.2 million. The curtain wall at the Bangor High School for 1.9 million, and the roof structure at Mary Snow for 683,000. So in total, those are $10,115,731. And because there is no other types of funding that is available, whether through the grants or the loans, this would require a city bond order to complete these projects. So this request tonight is to fill in the finance committee, verify that you are okay with that, and if so, there would be a first reading on next week's council agenda for, I believe I'm working on it, most likely next week's, for authorizing the bond issue of $10,115,731. These projects are, the bond order will be related to the emergency provision under the ordinance, because these are above the single transaction limit for an improvement that would require voter approval, unless the council deems them an emergency. All of these projects have been talked about before, and air quality, as well as wall and roof structures, the council has taken the position that those are considered emergency measures that need to be funded. So the council order will refer to the emergency provision under the ordinance and not go out to bid for approval. And the school department is here to answer any questions you may have.
Anyone have any questions of the school department or financial
I just have
council?
one,
Oz?
just for clarification. Did you say that this would wrap all of these projects up?
Yes.
These would be complete
Yes,
after this?
Once we get this funding in, these projects have been ongoing, but this would wrap
They
up
have
all of
been.
these projects.
Okay.
There was other COVID money. Jerry Heyman from the school department did provide some information in his memo that they've been doing numerous projects at various schools. So you may wonder why there's not more COVID money that may be being applied to these, because they did multiple little projects at a lot of the other schools. So they're trying to get as much done across the board at all the schools as possible. And unfortunately, replacing air quality systems is very expensive. He did provide a chart for debt service. If we assume that we put everything that the school department requested out to a bond issue and actually issued the bonds all at the same time, it would create an increase in some debt service requirements over the next couple of years before we start seeing a ramp down and a reduction. But again, that is assuming that we would bond them all, which we wouldn't do. We would phase that out to lessen any impact to the taxpayers. We've been budgeting for a bond issue for a number of years, the last couple of years, which we haven't done. We will be doing one this year. So some of that money that has already been budgeted will help mitigate the impact in the future years to the taxpayer.
Council for you?
You kind of answered my question. So do we anticipate? We're not anticipating all of this to be happening this year.
Correct.
Or next year.
I'll have to sit with the city manager and we'll determine exactly how much we're going to bond, but we wouldn't be looking at bonding all of this.
So it'd just be staggered out potentially.
Right,
So-
this is the 10 million to finalize it. The
Right.
council's already approved roughly 13 million
Right.
before, so
Yeah.
we wouldn't be bonding all $23 million this year.
So in 2029, I'm seeing a big principal.
Yes,
Explain to me.
that is, we have the school sinking fund. So
Yeah.
there's a balloon payment for lack of a better term, that's due in 29, but we've been putting money away into a sinking fund, which
Okay,
is why we're not actually going to be impacting the taxpayer for that
Yeah.
5 million.
okay,
The impact of the taxpayer is actually a negative 112.
Mhm.
all right, just wanted to, it's a big number.
Yes.
Okay, do you need any action from us on this?
Do the motion.
A motion that,
A
to
motion,
approve, to recommend to the full council, and we'll go on to the next agenda.
a motion for Gary to come up, Alex, no?
I don't know, Rick, I would be opposed to that. Okay, there was
I'll make that
a
motion.
motion in a second, and without any objection, this will go to the council.
Thank you.
Thanks, nice to meet you. Good luck. I know, a drum roll or anything for the next?
Yeah, for the next.
The
So,
2021, no, 2023.
so our next item is gonna be a review and presentation for the city's fiscal year 2023 audit. It's been a long road, but we are there. It has been, questions have been raised, certainly by the council and by citizens, over the past few months about different aspects of the audit and what caused it to be delayed and what the impacts were. We talked about that at various of those meetings, but I put a summary memo together that sort of talked about the audit itself, that our audit is a very significant undertaking, and it requires a lot of dedicated staff time, as well as time by the outside auditors. And in this fiscal year, we were sort of hit with a group of things that all came together and created unprecedented circumstances. And I won't read everything that's in the memo, but I'll kind of go over the highlights. Is part of it was moving from City Hall down to this location that occurred directly during our typical audit season. It also restricted access to some of the files because we don't have enough room here to bring everything with us. The asbestos abatement was going on back at City Hall, so we kept employees out of there until that was completed, so that we could get back in and get the record safely. One of the biggest primary issue that impacted the audit was our staffing issues. Finance department was short-staffed. The Treasury department was short-staffed, which created them a big backflow of work for them. Community and economic development was almost non-existent. They were down to, I think, 2 people at one time. So a lot of the testing that needed to get done on our grants, the staff that remained were unfamiliar with it. It wasn't their job to deal with those grants, so it took a lot longer than normal to pull the records that the auditors needed, answer the auditors' questions. And the delays that we had replying to those, moving down here, adjusting the audit schedule, impacted the auditors because they, just like everyone else, also lost staff. And with that can become an issue if the employee that leaves did some testing, depending on the circumstance, that may require retesting of those things, which could double the work. There was some things that we did have to resend to the auditors over the course of the work. And part of it was, been talking about the tech review. They typically have, I think, 2 tech reviewers, and they were down to 1. So that one had to handle all of their clients. That's a big undertaking for anyone to do. So, and on a procedural side, the school department as a department of the city we used to run all of their transactions through the city system. We have 2 operating systems. School has their own and the city has ours. We used to double up every entry. They would do it on their side, we would do it on our side. And we as staff, along with the city manager, had discussions about, that seems like a lot of extra work. So we'll run everything through the school department side, and then we'll do a 1-year entry on the city side to book it, similar to what we do with Cross Insurance Center. That's operated by a third party, but they run everything on their books. We get an entry and we post it on our side. We make sure everything looks reasonable, and the auditors still test it all. They do all of their testing just like they would if it was on our side. And they do that with the school department. They do it with the Cross Center. That created some unexpected complications and issues both with our bank accounts and with the systems. There was, it took a significant amount of time to do some reconciliations and to get that back up at speed. That was, again, first year implementation. There was things, looking back, there were things that we could have done different. There was things that we didn't think of that we thought we had under control, but there was some pieces to that change that were not taken into consideration that created some ongoing issues. Also this year, there was a couple new governmental accounting standards boards pronouncements. Both of them required significant additional testing. One of them was related to third parties that you contract out to run your operations, so therefore parking and the cross insurance center. Depending on your relationship with those parties, you may have to disclose certain information or create a present value of future payments to that organization, depending on your circumstances. Neither one of our contracts met those, but all of those contracts had to be read and studied in order to determine how it matched to the pronouncement. The other one that was a significant undertaking was the determination that our software, all basically cloud software, online software, the GASB board now determines that if you are essentially, if you're locked into an obligation, you've entered into a contract to use a particular program for the next 3 years. Essentially, you're renting it. Therefore, you have created an obligation that should be disclosed in your financial statements so that people know that you are obligated for this payment for the next few years, like your debt service. We show our debt service, we show our leases, stuff like that we've been locked into. So this was related to programming software. And so we had to do the best that we could, inventory and discussions with every department as to what programs that they use, what do they use it for? Do we pay just for maintenance? Are you locked into yearly contracts? Are you locked into multi-year contracts? And that took a lot of time for us to nail down. We do know that for fiscal year 23, we did not have those requirements, but we know that we'll most likely have them for 24, and we will have them going forward because nearly everything we use now is cloud-based and requires some type of membership and per person cost. So that's something that will impact us going forward for future years. So that's the highlights of some of the things. I did want to add that we certainly were not alone. There were a number of other communities in Maine that filed their 23 audit into 24. And as of the date of this memo, and you'll see in the auditor's presentation, because they are their clients, Augusta and Auburn, are clients of the same auditors that we have not yet published their 23, as well as Biddeford and Belfast doing some quick research. None of those cities have also issued their 23. Based on, I don't know the situation in all of those communities, but I do know that in some of those communities and others that I didn't list here that have not filed yet, they had the same problems that we had. Basically, mainly it was primary staffing. Key peak personnel left. And it is very difficult to come in the middle of an audit or even find somebody that can take that and come in off the street and be able to take over and complete that. So 23 was bad. We are looking at ways to make sure 24 is not that way. We're working on schedules. We've already started on the 24 audit with what we can do preliminarily. There are some time periods that we have to wait before we can really get into it. I know the school department's working on their side. We've been working on our side. We've sent out stuff to the departments. We're tracking to make sure that we get things back in a timely manner from the departments. The loss of the assistant finance director will be felt. This would have been their second year, which is sort of when things start to click a little bit. So with that position being down, as well as what is Jane's position?
Senior accountant.
The senior accountant at the school department has also retired. They are the primary person who does the bulk of the work. They are still in contact with that person, and they're starting to do some preliminary audit work as well. But Jerry and I have had several conversations, so we were we're doing what we can to make sure that we are on track. As of today, we're still expecting to be able to issue the financials before the end of the year, like we used to do prior to 2020. So we certainly can talk about this, or we can bring up the auditors and go right into their presentation.
Any questions on, I think everybody was aware of most of the issues. Any questions on that? I think unless there's questions, we'll bring the auditors up.
Okay.
Get right into the numbers. Um,
Heard you like this.
You can.
Right here?
Yeah, that's great.
I'll just shift over.
Thanks.
I have some printed copies of some reports, the presentation.
Yeah,
that we-
if you,
All right,
if
it's
you
gonna
didn't-
be up
if
here.
you don't have your iPad,
uh,
we have some hard copies and it will be up on the
Would
screen.
anyone like?
I'll
printed
take one.
copies?
Thank you.
And then,
So this is Jen Connors and Marcus Pratt. They work for Runyon Hurstein and Olet from South Portland. They're the city's external auditors. I will state that they work for the finance committee. They don't work for the finance department. They don't work for the city manager. They work for the finance committee, who is the committee that oversees the financial statements and the finances of the city. So
this is some of the other reports that we have for the. Actually.
So the other report that they're handing out is our compliance reports. That is what's known as a uniform guidance and a MAP report. Those are the reports that are done at the federal level for all of our grants. And then at the state level for all of our grants. It's been talked about at previous meetings that we have a significant amount of dollars and grants that we receive at the federal and state level. Those all require significant testing. There was some findings that you'll see in these reports for last year. A lot of it related to, again, staffing issues, reports, missing documentation because staffing changed in the middle of a process. Some reports that got filed late because of staffing issue, people were taking on multiple duties and missed the filing deadlines. But there was no material issues. But there was some, some what would be significant issues that we need to deal with. We've talked with the department heads involved. We've established the responses that we put in there, and we don't expect the same types of delays and issues because most departments are back to being fairly fully staffed. I can't say fully staffed, but much better position than they were during 23.
Oh, thank you. Yeah, so actually Dave did a really good job of laying out all of the issues that we ran into this year, and I appreciate how much effort he put into putting together that memo. On the graphs, which we put together, which is an overview of the audit itself, on the second page, we actually kind of highlighted some of the issues that we ran into. I won't go over all of them because Dave has already mentioned some of them, but I will mention also that we did have to restate net position on the entity-wide financial statements, so statement 2. The city is a recipient of opioid settlement funds. And because the settlement funds actually stretch out a number of years, we did actually have to do a calculation and recognize a long-term receivable and what is basically deferred revenue for those amounts. So we also had to do that. As Dave mentioned, we also had to test a significant number of programs. We actually tested 9 federal programs this year in 2023. As well as we had to test some programs for the state level reporting. It's not unheard of to test that many programs here. It's definitely on the higher side, but it is a significant amount of work. And because we did have findings this year, we had to do additional procedures on top of the regular procedures that we perform.
Was the testing required for the ARPA funds?
I'm sorry?
Was testing required for ARPA?
Yes,
Yes.
yeah. Some of the federal agencies will automatically tell us that some of those programs are considered high risk, even though we've tested them in the past, so we are automatically required to test them again. So that is one of the reasons why we had so many programs that we were required to test in 2023. Any questions on that, or? I think we could have much better.
Can I get one of those hard copies?
This one?
Yes. Thank you.
So on page 3, I actually gave you an audit timeline for, the audit for 2023 as well as 2022 and 2021, so you could kind of compare the timing of everything. The beginning of it was basically on par, except for, we start the audit in October. This year, we only did 2 weeks in October, starting in October, as opposed to we are usually here for 3 weeks. And that is because of City Hall moving. So we did have to push back some of our field work into January. We actually had two separate timeframes where we came back to do additional testing. And then we did follow-up procedures. We actually received the draft of the financial statements on March 28th. However, we still had some open items. We had additional questions related to what Dave mentioned, the subscription-based technology agreements. So that kind of stretched out into May. Once we get past March, we actually get really busy. Marcus and I both have quite a few December year-end clients. So then when we run into conflicts as far as our schedule with continuing testing here, as well as some of the audits that we have going on. We got revised financial statements in May. And there was some back and forth on some things, and then again in June. And then we finally had the technical review, which was done in July. And then the reports were actually dated July 22nd.
Just a question on this. I mean, as you said, most of these started in October and November. Haven't you already started the 2024 audit? Weren't you?
Yes, we
Yeah,
have.
they come in June to do preliminary work.
Okay,
and
so
then they'll be back.
so that's when you come back and do, you don't count, that's not what you call start.
No,
the
we,
audit.
we always do the pre-audit work in June, so this timeline starts when we come back.
That's like when
for
you
the
come in and do
actual field
testing
work.
and stuff.
Yes.
Okay.
Right,
Yeah,
they'll-
like
When
year end
When
amounts.
is that gonna happen for 2024's?
We have the same timeline.
Same,
we're-
October.
We're scheduled to
Yeah.
come back in
Yeah.
Okay.
October.
They
Thank
were
you.
already here in June.
Right.
They provided some stuff that they pulled for testing.
Right,
Some of it's at City Hall, so we're compiling a list so that we can go down, grab it, get it to them so that we don't have those delays, because we can now get back into City Hall. So we're gonna try to have everything either already sent to them in advance before they come to in October, or it'll be sitting on a table for them when they get here.
thank you.
So the rest of our, the rest of the graph here just focuses on the results of the audit itself. So for the financial statements, they did receive an unmodified opinion, which is a clean opinion. And then we also issued a report on internal controls over financial reporting in accordance with government auditing standards. You do have a copy of it, and it is stamped as a draft. The reason being that we are not, we can't issue the final reports until we receive what is called the corrective action plan from management. So management has to give to us their responses as to how they're going to correct whatever finding that we found. We did get responses, but not before we printed these for the.
Right, there was a
meeting,
couple
so.
outstanding issues that I was waiting for a couple departments, received resolution of those today, sent them the final responses to all the comments all while they were driving here today, so hopefully within the next couple of days, by the end of the week, we'll have finalized reports.
So nothing will change other than we'll insert the management responses.
So the material weaknesses, cash reconciliations and deposits, that was the bulk of it?
That was a big chunk of it, especially related to a lot of the things, because the delays in the Treasury Department, which is they've pretty much resolved now. They're not nearly as far behind as they were. They're caught up on cash sheets. There's a little bit of mail that's a backlog, but during certain times of the year, that's expected. They're actually stayed late tonight to start try to get that compiled. The reconciliations, the problem that we had with the reconciliations is the further behind the Treasury was, the harder it was to do the recon, because there was items that would be timing wise between when it hit our system and when it hit the bank could be weeks, if not months apart. All of those windows have narrowed down. It did carry over a little bit into 24, which has created some initial issues. But we're working on the cash recons right now. We expect that will be done before October and the auditors arrived, just like we should be.
So you said it has compressed.
Yes, it has compressed.
So what's-
As the
what's
closer we got to fiscal year 24, at one point, it was completely caught up. The recons are, because they relate to the school department, we have to work with the school department and coordinate with them. I've talked with Jerry, we'll be getting their cash recons to compare with ours, and then, so they're being worked on both sides, but they haven't been compiled into one yet, which is what we'll be doing over the next couple of weeks. But the treasury piece of it, that created a lot of the timing issues that have been resolved during the course of 24.
Right. So under that report, as you read ahead, there were no findings or no significant deficiencies, but we did have a material weakness related to the cash account reconciliations as well as the timing of the deposits, which we can go into further detail on that if you would like. In addition, we also have a report related to federal compliance, which is done under the uniform guidance or single audit requirements. And that is because the city receives and spends over $750,000 in federal funds. We are required to come in as your auditors and test your major programs, the larger programs that exceed that $750,000, as well as some additional programs under the main requirements. So under the federal testing, there were 9 programs that we tested, which we've listed out here. There were no material weaknesses for those grants. However, we did have some findings, which we'll also go over those as well as significant deficiencies related to the controls over the compliance. And then on page 5, there's also a separate report that is done for the city in accordance with Maine Uniform Accounting and Auditing Practices, which is also known as MAP. And what that is the state requires the city to have certain programs tested that are received through the Department of Transportation and DHHS. And so we come in and test some of the larger Maine state grants. You will see some overlap, such as Women, Infants, and Children, also known as WIC. That is tested for both federal purposes as well as state purposes because it's a fairly large state grant. And under that testing, there were no material weaknesses, but we did have significant deficiencies and compliance findings as well. And we'll go over those in detail as well.
You will go over those in detail.
Yes.
Yeah, because I wanted to ask, so I appreciate that you'll be discussing this.
Yeah, this
Yeah.
is just kind of the
Yeah.
overview
Overview,
after
yeah.
the total results
Yeah.
of the audit. And then the next few graphs, Marcus is going to take over and talk about some of the numbers from the financial statements themselves.
The fun part. So this is the first graph we have, details out your fund balance for general fund over the past 5 years. It gives a good visual representation of how your equity position has changed over the last 5 years. And we break it down into the required categories according to GAAP. First, you have your non-spendable fund balance. And this represents amounts that are not in a spendable form. So normally this is something like inventory or prepaid expenses where you've already spent the money to acquire those assets, so you can't really spend it again. For you guys, this also includes advances to other funds. The next category we have is your restricted fund balance, which is restrictions imposed on your resources by an outside party. This can be things like grant receipts or if you have any debt covenants that require you to have a sinking fund of sorts, those would be included in that restricted fund balance. You guys include your PEG capital support and all of the school department fund balances, because they're all restricted for educational purposes. They all get presented as restricted fund balance.
On the non-spendable
Yes.
category, are we required to fund all earned time off and all vacation time that's accrued?
So on the fund level, you don't report liabilities for those because they're long-term. On statements 1 and 2, you do show the liability for it.
Are
So
they funded?
you don't
or just a
necessarily
liability?
you don't need a reserve for it or
Okay.
anything like that.
It's a
but-
presentation.
Okay.
Right.
We have to present it and show it on the statements,
Yeah.
but we don't fund it on the books.
So the next category we have is your committed fund balance, which is restrictions posed internally at the highest level of decision-making authority. So if the council said we want to set up, we want to put these funds aside, we want to commit those funds for a specific purpose. For you, it includes your carry forwards, so various departments carry forward expenditures to 2024. That's what represents your committed amounts. We also have your assigned fund balance, which is amounts that are set aside for other purposes, but not necessarily restricted enough to be considered committed or restricted. A lot of the times we'll see this being use of fund balance. If you budget to use fund balance in the next fiscal year, we'll show it as assigned because you're already going to consume those resources in that manner. Your assigned fund balance is mostly your reserves, encumbrances, workers' comp, and then some other reserves are included in there as well. The last category we have is unassigned, which is everything else after we've assigned it into the other categories. From 2022 to 2023, you increased your fund balance by $2.2 million. So a relatively healthy increase in fund balance between those years, and that's total fund balance. You will notice that the different breakdown of those bars, they all vary from year to year depending on what activity you have going into them. The next few slides we have go over your budget actual, so it compares the actual results of 2023 compared to what you budgeted for. This first one is going to be city and school and for revenues, and then we have expenditures as well. So in total, you guys had a pretty good year. On the revenue side, you were $4.5 million over budget. So you essentially collected $4.5 million more than you were anticipating. Some of the reasons for this were your taxes. You collected about $500,000 more. This is due to the increase in vehicle registrations. We're seeing this at a lot of our clients. It's very hard to nail down that number of excise tax because everyone needs a new car and that's not going away anytime soon, apparently. Although I don't think you guys are complaining on this side. It's a nice little extra that you guys get. Your state revenue sharing exceeded the budget by almost $800,000. This was due to the differences in what you're expecting to receive from state revenue sharing and what you actually received. Your other intergovernmental revenue for the city was lower than budgeted. This is actually due to lower than anticipated use of general assistance because you have so many other programs that people qualify for and have made use of. It has a reducing impact on that portion of your revenue. The other intergovernmental for school exceeded budget by about $3.8 million. So this is the bulk of that 4.5. And that's due to the receipt of reimbursements for prior year grant allocations and additional grant revenues that were not anticipated. As you guys budget for your school grant funds, this number can be a little bit all over the place because those can be hard to determine. Your charges for services, you were under budget by $410,000. This primarily deals with lower than anticipated tipping fees on municipal solid waste third-party haulers. And finally, your other financing sources were higher than budget due to an insurance settlement that was unanticipated. The next slide, we have city expenditures. We do have a few school or education lines in here as well, but it is at the high level. The following slide will actually go over a more detailed view of the school expenditures. On the expenditure side, you guys were $6.5 million under budget. So kind of in the right spot on both revenues and expenditures. General government, you're $860 roughly $1,000 lower than budget due to unfilled vacancies in the finance department, lower health insurance costs and benefit costs than anticipated, and reduced schedule for public transportation. Again, something we're seeing in a lot of our clients, Dave touched on earlier as well. You know, it's finding it hard to get staff. While it comes out as a positive on the budget side of things, the long-term effects of that are not quite a good thing. Your health and community services and recreation expenditures were about $600,000 less than budgeted. And this was a lower demand for general assistance, as we talked about on the revenue side. That has a expenditure impact as well. So those amounts pretty much wash out. And then savings on health coverage due to employee selection. If you budget for full family, someone decides single or they don't want coverage, it saves you guys a fair bit of money. Your public services expenditures were lower than budget due to lower than anticipated municipal solid waste tipping fees. Another thing we discussed on the previous slide. So some of these have a net impact of less than it seems because your revenues and expenditures reduce as these things change. Education, as I mentioned, we'll go over on the next slide in more detail. You're about $3.6 million under budget for education. Your other expenditures for education were higher than budgeted due to higher spending and grant funds than anticipated. Again, this offsets with that revenue that we discussed on the previous slide, because those are funded with receipts.
Council
Yes.
Sweeney?
Under general government. Unfilled vacancies for finance department.
Yeah.
That just seems to be a big amount. I know
It's
health
not the, it's
insurance,
not the only one. There was,
yeah, there's health and there's benefit costs, but
right, but it wasn't just the finance department. It was also the treasury department. It was the IT department. There was multiple departments that had.
that
a
would have been
vacancy.
more helpful to
that-
see that.
yeah.
Okay, thank you.
Finance sort of encompasses, because IT is part of finance as well as the finance department. And initially, up until the last couple of years, treasury was also part of finance. So it was more of a generalization, but it would have been clear if we had
Yeah.
identified more things.
That just stuck out at me. Thank you.
So the next slide, we have the school department expenditures. And this breaks it down by the 11 state articles that the DOE requires the school to report under. You can see they're all in the positive as far as you had. You came in under budget for all of the cost centers. Special education, you're under budget due to lower than anticipated support services that just did not need to be utilized. Again, this is a very hard area to budget. I hear all of my clients talk about you get one or two kids plus or minus in the special education department, and it's going to blow the budget right out of the water, either positive or negative. Your student and staff support was about $111,000 under budget, and this is due to open positions during the year. Seeing a bit of a theme. Debt service was lower than anticipated by $447,000. And that's because there was the anticipation of a bond issuance that would have increased your debt service costs. But I believe that it ended up getting issued in FY24. No, okay, then it will.
It's gonna be 25.
It'll get issued in FY25. So,
We did do some issues in 24, so part of that we covered.
okay. So you came in about $1.1 million under budget on the school department side. One thing to note that's not shown here because it gets netted into, or it gets included in some of the city numbers. On the prior slide, there is a line for transfers out. So some of that money I do believe got transferred either into capital projects or
Yes.
back into capital
And
projects.
capital budgets.
For future capital uses by the school department. The next slide we have here is your general fund balance as a percentage of budget. Prior year general fund operating expenditures, which I believe is your total budget less debt service. That's how that's calculated. So the city does have a minimum and maximum fund balance policy. You have a minimum requirement of 8.33% of your general fund operating expenditures and a maximum of 16.66%, which I believe works its way out to 1 to 2 months operating expenditures in general fund. You can see you have had a relatively positive trend over the last few years, 2021 being a little bit of an outlier. Under the current policy, the city was actually a little bit over the maximum requirement of the policy. So you're sitting at 16.84%, where 16.66 is the high end. So you are relatively right in that target range, but on the high end of it. From 2019 to 2023, you had an increase of 3.58 total percentage points from 13.26 to 16.84.
And I will say, obviously, this would have been made more sense had you received it before. But the council may remember a few months ago, we did a transfer out of unassigned fund balance of $4.5 million. That is because we were over our limit and we wanted to bring that percentage down a little bit to around 13%.
The next slide we have is a comparison to a few other communities in the state, Auburn, Augusta, Gorham, and Portland, to be specific. So we have a 3-year period where we are showing that their percentage of fund balance. And it is important to note that all of these communities include both the city/town and school departments of their representative amounts, because they might not all necessarily be reported in the same fund, depending on how the entity reports their activity.
So what do they have for highs and lows? And is it within the range?
They're all relatively consistent as far as where they're at. So like if you look at Portland, it went from 17.81 to 18.37 to 17.26. They're all very consistent as kind of the area in which that they sit. They're a little bit of ups and downs, but really not all that much. You know, Gorham, you can see goes from 10 to 11%. You guys kind of sit.
Yeah, so my
On the
question
higher
was
end?
more, I'm sorry,
No.
my question was more, what's their target? What's their minimum? What's their high?
Not all of them necessarily have a fund balance policy.
Okay,
I don't know off the top of my head what any of the other communities have, but they might not just have. I know Gorham does, but I don't know their policy off the top of my head. I don't know if the other entities have a set policy or a target. Yeah. But I do think a lot of the times when we see, Jen, you can correct me if I'm wrong, it is that 1 to 2 months expenditures that a lot of places look at for a range, because I think general finance recommendations is that range. So as Dave kind of mentioned earlier as well, you'll notice that Auburn and Augusta for 2023 don't have a bar. It's because we don't have that information yet, so we would not be able to include it in the presentation. So yeah, you guys sit on the higher end of these communities. I think for all of these comparisons, Portland is about the only one that's kind of towering over, not really even towering over, but sits a little bit higher. The next slide we have is tax collections the last 10 years. The collections, it's important to note the collections are for any given year for the taxes levied in that year only. So when we were looking at 2023, you collected 97.7% of your total tax commitment during 2023. So this does not include collections going forward. Like 22 isn't going to include additional collections collected in 23, and it's all during the fiscal year. And from 22 to 23, you did have a slight decrease from 98.2% to 97.7%, likely due to economic conditions. People are feeling the hardship of not, dollar doesn't go as far as it used to, and all that.
I will add where these are specific to each individual tax year. When this amount, this 97% is added to the collections for prior year taxes, we do always collect more than 100% of what our tax commitment is for the year. So we're never at a position and haven't been where we've collected less than what we intended to collect. It just isn't all related to that specific year that we budgeted.
And the next slide, we have another comparison to the same communities. Honestly, the bar chart itself is not very flashy. It's a little bit difficult to really see much difference. But we're really talking of less than 1 to 2% difference in your tax collections by community. All of these towns are sitting at 98+% collections for most of these years. And you can see that they're very consistent. Portland's sitting a little bit higher than you guys are. But I think you guys are the next highest on the list, and they're still at, 99.1. So they're at less than a percent point higher than your collections, for any given year. And on that, I will pass it back to Jen.
Okay, slide 14 is an overview of the general fund revenues. And we also have the 2022 general fund revenues, so you can kind of compare the two fiscal years. So what this is each revenue category is expressed as a percentage of your total general fund revenues. There's not really much to say here because they stay fairly consistent from year to year. Usually what we see is maybe a 1 to 2% fluctuation in each category, and that's exactly what you have. Okay. And then on pages 15 and 16, we have the same graphs, but for general fund expenditures. Again, we've had included both 2023 and 2022, so you can kind of flip back and forth and compare the different categories. But again, they stayed relatively the same. There's just a very slight fluctuation in the categories. And I will skip on to page 17, which is debt per capita for the last 10 years. So this is measured on taxpayer supported debt only. So that is debt that is paid for basically with your governmental funds. It does not include any debt that is paid for with your enterprise funds. So say your sewer fund, your airport fund, those are not included in these numbers because they're considered to be basically self-sufficient or self-supporting. So you can see that this number has decreased dramatically over the last 10 fiscal years, being at a little over $2,000 in 2014, and then decreasing down to a little over $1,200 in 2023. And then on page 18, we actually have some of the same information from other cities. So you can kind of see where you are. You are definitely on the lower end of the scale. Portland is actually over $3,000 per capita. Gorham is around $1,600, which they have actually decreased over the last 3 fiscal years. And as Marcus mentioned, the information for Augusta is not available as of yet. And then that is it for what we have for the graphs as far as the numbers from the financial statements. Does anyone have any questions about any of those? Oh, okay.
Mhm.
So I will launch into the the comments that we have. We have quite a few of them. So the first one we actually already sort of talked about, which was the material weakness. So to give you an idea, there are 3 levels for our comments. The first would be another comment, which is something that not really significant. It's more of a recommendation, a way that you can improve on things, the way you're doing things. The next step up from that would be a significant deficiency, which is not necessarily something that is systemic, but it's significant enough to bring it to your attention. You definitely want to address it. And then the next step up from that would be a material weakness, where we see something that we consider to be a significant issue with your internal controls, and it's definitely something that you want to address. Specifically, this had to do with the bank account reconciliations. The fact that the reconciliations were done several months after the months to which they pertain. I believe we got the June 2023 bank reconciliation in March of 2024. I know Dave has already talked about the issues that were related to his reconciliation, so I won't belabor that. As well as we did see some deposits in transit that cleared the bank several weeks after when they were initially received. And I know it's not that those funds are not secured. We know that they're kept in a safe, but that's still a significant amount of time between when they are received and when they are actually finally deposited in the bank. So because of the significance of the numbers involved and the fact that bank reconciliations are definitely a significant internal control, it's an important internal control, we consider that to be a material weakness.
So was there a recommendation on that, and it's already been corrected going forward? And
Well, recommendation was that deposit should be made in a more timely manner and the monthly bank reconciliation should also be done more frequent.
So it's just a
frequently.
shortage,
Sorry, I can't
shortage.
talk.
It was just an issue of not enough people, or
I'm sorry?
was it just an issue of not enough people to do the job? That
Yeah,
they
it's,
weren't being
it,
made in timely?
like Dave
Yeah,
said, it was
yeah.
just that the treasury was so far
Right.
behind.
Right, so the impact was the staffing issues in treasury compounded with the fact that we didn't change our service level. So most of the work, the staff that was there was primarily focused on walk-in customers. So that took them away from mailed-in receipts, mailed-in payments, or transactions that may have been collected at another department that gets sent to treasury to be input in the system. Those all got put on the back burner while customers that walked in the door were being waited on. And then as new staff came in, they required to be trained, which was training again on the front counter. So it created a big gap. So one of the things that they were seeing was obviously customers would call and say, you know, I sent my check in for my taxes, but it hasn't cleared my bank yet. So after a while, they started going through the payments and getting the deposits sent to the bank, so the checks were clearing from the customer's perspective, but the still wasn't entered into the system until potentially a few weeks later or even a month later, which created a lot of delays and significant issues. So again, during fiscal year 24, they became fully staffed. They got everybody between the city clerk's office and the treasury, the combination of the two, everybody got cross-trained. So there was a bigger pool of people that could be utilized to enter the payments. They've dealt with one of the issues that an ongoing comment on the management letter is segregation of duties. They've dealt with that. They have one person that all they do is open the mail while everybody else works on inputting the mail to try to deal with that. So they're utilizing everybody that they have now. And except for, you know, vacations, illnesses, maternity leaves and all of those things where it creates a shortage, they're relatively up to date and caught up on not only processing all mail, but also doing the cash ups. So the type of issue that we saw here has been resolved, assuming we don't lose half the staff again.
Dean?
Going forward, if this was to happen again, have you ever looked at temporary help, or does that?
We have, and during this time period, they did reach out to various staffing agencies. There is a limited pool of people that can come in off the street and know the information, but we have brought in people that have at least somewhat apparent background in at least the idea of it, try to train them to get them up to speed to do that. It's sometimes the hope that a position is going to get filled is sort of outweighs reaching out and bringing in a temporary help. And then after a while, it gets blown out of proportion. So it is something will be more in line with, you know, if we don't get enough resumes within the next, you know, within the first couple of weeks, that will be the first avenue, is to try to get a body in there to at least do as minimal as anything is better than nothing at all. And so those are avenues that they'll continue to watch for on the off chance that, you know, we run into this situation again.
I'm then gonna go over some of the compliance findings that we had. The first one had to do with the opioid STR grant, and I will also point out that this finding is also included in the MAP report. They look a little different because in the uniform guidance report, we are required to refer to the grant by its assistance listing number and by the official title of the grant. Whereas in the MAP report, we're required to refer to it by the agreement number. So in one, you'll see number 93.788 opioid STR, and then in the other one, you'll see agreement OSA 23-373A. They are the same grant and they are the same finding. The issue with the grant was that they are required to file monthly financial reports with the state within a certain period of time that accurately reflects the amounts. And during our testing, we found several reports that were not filed by the required deadlines. In addition, there was an expenditure that was dated September of 2022 that was actually reported on the August 2022 report, when there is supposed to be a cutoff for the items that are reported. So our recommendation is just that the city should implement a review process and ensure that reports are filed by the deadlines. They may need to use a reminder system. I didn't see the response, so I don't really know what
Right,
the issue was.
So the reply to this, and once we get the completed report, what will happen is Jen and Marcus will send us essentially these reports with our comments built into them. We'll send them out to all the council and they will get posted on the website. But the response to that question based from conversations with staff is the grant involved had wording built in that invoices were to be maybe submitted before the 15th of the month, but no later than 45 days. And they also relied on other industry professionals that told them that, oh, you don't really have to do it by the 15th, you have 45 days. So everything got reported within the 45 days, but it was clear that there's a separation between invoice reporting and the reporting reports for the reports. Jen Gunderman, our Director of Public Health, has been involved with these emails and the responses. Our position will be from the staff perspective is to make sure that she will make sure that all of the grant managers are aware that they need to get all the reporting done by the 15th to continue to comply and make sure we comply with the grant rules.
The next page we have, this is a finding related to one of the school department grants, which is the Elementary and Secondary School Emergency Relief Funds, also known as ESSER or ESSER. Those are some of the COVID funds that the school department has received. This one is actually a significant deficiency, but not a compliance finding. The reason being that they technically met the compliance requirement. However, it didn't quite meet the internal control part of it. I know it's a fine line, but basically the requirement is that construction contracts are required to include wage rate requirements, also known as the Davis-Bacon Act, so that the contractor and subcontractors are aware that they are required to follow DOL or Department of Labor regulations, and they are required to pay their employees the prevailing wages. The wage rate requirements were not actually included in the construction contracts. Instead, there was language in the contracts that referred to other documents that had the language. So it technically didn't meet the requirements. So our recommendation was that the language should actually be included in the contracts themselves. They really should be a standalone document.
So I will add that this, admittedly, both Jerry and I pushed back a little bit on this finding. And because for a long time, all of the city's RFPs, both the city and the school, our request for proposals include, when necessary, include the Davis-Bacon information. And when we do a contract, we include the original request for proposal as an addendum and then, or an appendix to the contract. So the documents that Jen's referring to is us adding the original RFP with all of the scope of services and what's expected as part of the original contract. So from our perspective, it was in there because that becomes part of the contract. An appendix to a contract is still part of the contract. However, I will say too, in their defense is they found it in this as part of their testing. We've also received the same comment from our cognizant agencies in regards to FTA grants. So we know that that appears to be a shift at the federal level in that they want to see the federal language requirements built into the body of the contract. So both the school, Jerry and I have talked, as well as the city side, are modifying, have already started to modify our practices to put all of that required language, both in the RFP, in the contract itself, and still in the RFP as an appendix to the contract. So it's gonna be in there multiple times. So it'll be very difficult for any contractor to say they were unaware of it, moving forward. So,
Yeah, this, unfortunately, this is one of those things that's a technicality, but
Mm.
it's a requirement, so we're required to report it, so, yeah.
Yep.
Yeah, and I will agree with Dave in that, since the feds switched to the uniform guidance, they have become much stricter about what is in writing and how it's in writing, and so, yeah, they are kind of cracking down on those requirements. Let's see, I'm gonna let Marcus talk about the next one, which is the AIP program.
Yes. So as part of the AIP program, which is the Airport Improvement Program, it's funding that you guys received to do capital and other projects at the airport. You know, a lot of your runway funding or hangars is that's where you get that amount from. You're required to file a fair bit of reports through the AIP grant. When we reviewed those reports, we found some inconsistencies. Essentially, there's multiple types of reports. One is an SF 425, one is the SF 270 or 271. They're slightly different. They're required for certain projects, but not others. I can't remember specifically if it's 70 or 71. But they report essentially the same information to the feds. So honestly, not really sure why they want both of them, but I don't make the rules. So unfortunately, you got to do what you got to do. And we found some inconsistencies where there were some expenditures reported on one of the reports for the same period, but not the other. And so you want to make sure that when you're reporting to the feds, that it is accurate, because they do rely on that data, and that can have an effect going forward. So if they get too unhappy with your reporting, they might come back negatively. So our recommendation for that is to have an additional level of review of someone that is of sufficient knowledge of those grants to ensure that only expenditures that have been incurred get reported. And I believe the ultimate issue was a timing thing between when things were recorded and the way that the feds want the reports to be reported, because they are very specific with the way they want this stuff.
this particular report at the time it was filed was being prepared by a third-party contractor and then signed off by the airport. This was missed during the review and the sign-off. I've talked with the airport finance manager, Jody Varney. They've already brought the reporting for this report in-house, so she'll be doing the preparation of those reports. So they will be done all in-house by airport staff moving forward.
Great.
The next comment we have here is to do with your federal highway planning and construction grant, the BACS grant. It's for BACS services. Similar to what Jen was talking about earlier, as far as the Davis-Bacon requirements. So there's two items or two different areas of requirements for Davis-Bacon or wage rate requirements. One is that you include the language in the contract, and the other is that you do some monitoring of the contractors. And that's receiving certified payrolls. I think normally the engineer goes out and interviews employees and says, hey, how much are you making? And they document all of that. So the BACS grant has a fair bit of construction work that requires those certified payrolls. So one of the ones that we tested ultimately did not have that required certified payroll piece. Yeah, that part's required.
Yeah, so, right, so discussions with staff on this particular issue is there is an electronic wage reporting system where the vendors and the contractors go in and input the wages that they're paying their employees. Staff has historically relied upon that system, but the system had an outage which corrupted data. So the necessary wage reports were no longer in the system. And we reached out to the department multiple times to contact the vendor and get the necessary hard copy and the wage requirements. It was taking a considerable amount of time. And the auditors needed to move forward, and we were unable to receive that either from the vendor or through the department pushing the vendor to produce it. So I told Jen and Marcus that I understand you need to put it as a finding, but you need to put it as a finding, otherwise we'd still be waiting for the audit report. So we talked to the department that you can't rely on electronic system if the information is not there, so you need to go in on a more regular basis during the projects, as the project's ongoing. And if the information that you need is not in that system, you need to reach out to those vendors while they're still working on the project, and we have some control over dealing with those vendors.
Yeah, again, I was just gonna add, this is a technicality. It's one of those things where it's not that it wasn't being done, it's just without the documentation.
We were in
can't prove
compliance, we just couldn't prove we were in compliance
Right.
for what they. Because they always pull one that we can't.
it. Not on purpose.
On that, I'll pass it back to Jen for the last few there on the uniform guidance report.
So the next finding that we had to do with the Community Development Block Grant, also known as CDBG, which we tested for 2023. We actually have two findings related to CDBG. So let's see, the first one has to do again with Davis-Bacon. And again, the department did not have a copy of the contract. So what they have is they have money that they basically pass through to subrecipients, and then the subrecipients turn around and initiate a contract with the contractor. So in the department, they had contracts that included the Davis-Bacon language between the department or the city and the subrecipient, but they did not have the contract that was made between the subrecipient and the contractor. So there was no documentation that the requirements, the wage rate requirements were actually conveyed to the contractor or the subcontractor. It's not necessarily that there was not language in the contract, but we actually couldn't find copies of contracts in the documentation. So that was considered a finding. And our recommendation is that they just make sure that there's a copy of that contract in the files. The next finding that we had for the CDBG program has to do with their rehabilitation loans. They are required to have pre-rehabilitation inspections performed before the work is done. The deficiencies that are detected as part of that inspection are to be included in the contract with the contractor. In addition, they are supposed to have internal controls in place to ensure that the disbursements under the rehabilitation projects are approved and that the contracts have the required signatures. So there were a few things that were going on here. There was one rehabilitation loan file that was missing the pre-rehabilitation inspection. There was another rehabilitation loan file that had a contract that was missing the signature of the contractor. There was a third rehabilitation loan file that had a disbursement that was missing an approval. So again, this is because community development had turnover in staff. And unfortunately, they did try to locate the documentation that was missing from these files. They were not able to find the documentation. So we had to include that as a finding.
And essentially our response is the same for both of these findings is, as we talked about earlier, the staff turnover in that department, the people working on these loans were no longer there. They would occasionally come in to try to assist with answering the auditor's questions, but they really didn't have a vested interest in spending a lot of time because they had moved on to other employment. The staff that was here did the best to try to find what they could, but there was missing documentation. Speaking with current staff, They're aware of this issue. They've already, and especially in regards to the Davis-Bacon, they're already have drafted up new contracts so that the language is more clear. It's within the body of the contract. And they've been doing some training throughout for everybody in the staff that's there now so that hopefully this type of stuff will not happen again because more people will be aware and involved in the process and be able to know where things are and where the reporting needs to be. So we can go and pull what we need to pull without trying to hunt it down.
We have one more.
Which I'll
Sorry?
I'll wrap it up.
Yeah. So switching to the other report, which is the MAP report. We did talk about the first finding already, which was the opioid STR or the OSA 23-373A grant. But we have one other finding that Marcus is going to talk about.
Yes, so for agreement CDO 21-4289 and 23-4289, which is your public health nursing grant that you guys get through Health and Community Services. So again, there's a fair bit of reporting required for this. This is public health nursing, right?
Sorry?
This is public health nursing, right?
Yes, it is.
Okay, second guess myself. So there's multiple kinds of reports that are required under this grant. You have your monthly financial invoices, which is how you request reimbursement. But then there's more of a performance metric report that is required to be filed as well. It talks about the number of visits and some more of the metric data that the state wants to see. So when we did our testing, we found that the May 2023 report was not filed in a timely manner for the metric side. I believe it was a few days past the required deadline. So the recommendation we have on that is to set reminders if needed to ensure those get filed in a timely manner.
And the response from staff on that throughout the theme of the night is at the time that report was being prepared and was due, they had several positions leave. They had some new positions coming in, and the person that was responsible for filing this particular report was performing double duty as well as training new staff, and they missed the deadline. So again, Jen Gunderman will be CC'd on all of this information and talk with the staff to make sure that they do some type of reminders and understand that, you know, even when we're shorthanded, there are certain federal and state reporting deadlines that we need to meet if we want to continue to receive our grant money and our federal funding. So meeting those deadlines, we all understand is very important, and we will look to make sure that that gets done going forward.
That's it for what we have. If anyone has anything else they'd like to discuss.
Maybe, let's, questions,
Comments?
comments,
John.
questions, anything? Council Fornia.
Yeah, the fact that we have an unmodified audit makes me feel great. That's wonderful. There are no material weaknesses. That's wonderful. I think these are kind of minor things. Staff has addressed them, so that makes me feel very comfortable. You know, having the shortages of staff that created some of these problems, I guess that's just kind of what happens out there in the world. But so my one question, or are you both of you comfortable that we'll be able to have an audit by December?
We will do everything on our end for sure.
As of today, yes. Barring any massive staffing changes, yes.
Well, that's all I have.
Yeah, do we need to vote to accept the audit?
There will be a council order on next week's agenda to accept the audit.
Okay.
So this was more just a presentation, answer any questions that you had, but it'll be on next week's agenda.
Anything else? Anybody have anything? Thank you, guys.
Thank you.
Thanks.
Thank you.